Welcome to part 4 of our active seminar listening to Mark Douglas. Not only is it part 4, but it's also the second disc in his seminar.
Cover the underlying nature of the mental
it.
skills that you're going to be learning. And then at the end of the section, I'm going to put these skills within
Sections,
the context of
three
developmental
sections.
modes that you're going to eventually learn to trade in, which would be first the mechanical mode, then the subjective mode, and then the intuitive.
Sounds like this is when we start to get into some more
Everybody kind of have a good idea where we're going
today? The first 3 parts were kind of like intro
maybe a little bit
and
better of an idea
backstory.
than when you kind of walked in here. Yeah, okay. So anyway, what I want to do is let's just go through and take a little bit of an attitude survey here, kind of get an idea where you're at. There are no right or wrong answers here. It's just a matter of what you believe about the nature of trading. So if we just kind of making money as a trader is primarily a function of analysis. Who would agree with that? Everyone, kind of raise your hands. It's all right. Raise your hands. So you're telling me that only a few people would agree? Part of it? Okay. Okay. I often find myself thinking there must be a way to trade without having to take a loss.
No.
Come on, be honest. Come on. Oh, yeah, let's say I find myself thinking that there must be a way to trade without taking a loss, right? Okay.
When I first started, I guess it did.
By the way, the first
Actually,
one,
no, I definitely did when
one
I
of the
first
things, this is a primary.
I don't really know about the first one.
One of the things we're going to talk about a lot of making money as a trader is primarily functional analysis.
Primarily analysis.
That really isn't the case at all. What you're going to learn. In other words, trading is execution. Trading is execution. What you decide to do, of course, is analysis. And the problem is that it depends on what you're using your analysis for. If you're using your analysis to avoid the risk, then certainly making money is not a function of that, because you will virtually consistently lose. But we're going to talk about that more in a little bit, okay? Okay. I have trouble getting out of a losing trade. Anybody here still have trouble getting out of a losing trade? Okay, that's fine. You won't have that trouble after today.
That's something I am good at.
Really?
It's something
my goal
he
is
helped
that when
me
you walk
get
out
better
of
at.
here, you will understand in no uncertain terms that
I'm
there's
good at those questions because of his book.
no reason to hang on to what you will define in advance as a losing trade. Do you find yourself planning trades you never execute and executing trades you never planned? That's a pretty common thing that affects most traders. There's always a cost associated with finding out what the market may do next. It's good to think that. That means you're accepting the risk. That there's a certain amount of, cost meaning a certain amount of risk involved in finding out what the market may do next. If I were to thoroughly analyze my trading results, I would find that my average losing trade is much bigger than my average winning trade.
That's why you journal. You don't have to analyze. You journal.
There's a few people in here that might still be falling in that category. It only takes one trader somewhere in the world to negate the positive outcome of any particular trade. Who agrees with that?
Depends what you're trading.
Anybody? Raise your hand if you agree with that, please. Nobody raises their hand.
If you're trading a low
this is
penny
big.
stock
I love it. Thank you very
yes.
much. Thank you very much for not agreeing with that, because you couldn't be further from the truth. You couldn't be more wrong.
Not in commodities.
This is one of the things you're going to learn. It only takes one trader somewhere in the world to negate the positive outcome of your trade or your edge.
Yes, one person can move them.
That's all. Just
one person with a lot of money can move them.
You're going to learn that today.
But that's different than what he's talking about.
I wouldn't put on a trade if I wasn't sure it was going to be a winner. Who agrees with that statement? Please raise your hand. Please. Who agrees with that statement? Good. Good. Good.
I mean, yeah.
I'm saying good because
I wouldn't take a trade that didn't have
what I'm saying is that yes,
value.
there is a gap here that we're going to have to fill between your particular attitudes about trading and where you're going to end up with hopefully by the end of the day.
I would only take a trade that has proven positive expected value.
I would answer this question absolutely not. I wouldn't put on this trade if I wasn't sure it was going to be a winner. I trade from the perspective of I don't know if any trade is going to be a winner.
Right.
And I don't have to know.
But you know,
as a matter of fact, that is one of the principal, let's say, principal concepts that you will have to adapt to become a consistently successful trader. And what the pros have adapted, and the reason why they can do what they do, is because they have learned, not just learned, but they believe, without a shred of doubt, that they do not have to know what's going to happen next to make money. And don't even think about it in those terms. They don't even think about it in those terms. It's not a matter of what's going to happen next. When you understand the nature of how technical analysis, how your technical formulas and your mathematical formulas interact with market behavior and what they can and can't do and what their inherent limitations are, you will also understand that I wouldn't put on a trade if I wasn't sure it was going to be a winner is absolutely one of the worst mistakes you can make to be a consistently successful trader. It is. In fact, it's probably the number one. Kind of perplexing at this moment? Yes? Good. Okay, I always define my risk before I enter a trade. Does everybody here in this room at the point where they always predefine their risk? Who doesn't? Raise your hand. Please raise your hand. I want to know where everyone's at. Come on. It's all right. Okay. Sometimes I find myself blaming the market for what went wrong.
But know where you're going to get out when it goes against you.
Well, let me ask you this. Does anybody feel betrayed by the market ever? Anybody ever feel betrayed by their signals, their technical signal, or whatever methodology that they use?
Now I understand.
We're going to talk about that in detail too.
And will lose sometimes. What he was talking
about. The more
a
trader learns about the nature of the markets, the easier it will be for him to execute his trades. Who thinks there's a correlation there, that the more I learn about the nature of markets and price movement, the easier it will be to execute your trades? Who thinks there's a positive correlation there? Okay, again, couldn't be further from the truth. There's a negative correlation there.
Markets,
the more you learn, the harder it's going to be to execute your trades. It depends on why you're learning it, of course, but we'll get into that. To be a successful technical trader, you have to determine what the market is going to do next.
No,
I already said that's not the case.
You have to find an advantageous
edge you'll know how to answer that.
You don't have to know
but if I hadn't said it, how would you have answered it?
That's why I never make definitive statements about stocks.
Who would have said yes if I hadn't have already told you guys?
Don't ever listen to people that make definitive statements about
stocks. And you came to Houston? Oh, come on. Oh, come on.
Like, SPY will
go
up
trading
today.
skills. Who are the professionals?
Will go down today.
We already talked about that. And why would it be beneficial to think like a professional trader? We already talked about that. What's the answer? Anybody can make money, okay? We kind of already established the fact that anybody can make money as a trader. Yeah, we're talking about consistency.
Yeah.
What we want to do is we want to close that profit gap. We want to make sure that our bottom line results reflect the potential of our methodologies. Okay? And that's what the professional has learned how to do. The professional has learned how to close that profit gap.
We're starting to get into the meat and bones now.
They have learned the appropriate skills to do that. They're people just like you and me, okay? They're no different. They really aren't. They've evolved into a different way of thinking about trading. That's the reason why they can do it. And you can do it too, with understanding and awareness. That is really primarily what this workshop is about anyway. Because when you think about it, if you've read stories of people who have aspired to greatness as a trader, you'll always find, with almost all of them, that there's this underlying thread, this underlying theme that virtually all of them have lost one or more of what they considered a fortune before they started becoming consistently successful. Why do you think that underlying thread or theme exists in their lives? What's that? Why do you think that commonality exists? Because at some point they lose so often and then come back from losing, that one, they gain the confidence that they can do it, and as a result, the fear dissipates, and as soon as the fear is gone, they're trading from a carefree state of mind, and when you trade from that carefree state of mind, everything about your trading changes. Remember that the primary skill that we're talking about here is simply trading without fear. This is a trading skill. It is the primary skill that you will have to acquire to create consistency, to trade without fear. What does consistency look like? I've already went through on the grease board here and showed you a consistently rising equity curve
think you need
with
to go
the drawdowns, the normal drawdowns being a reflection of what? Anybody remember what I said about that?
So learn from your losses.
What that?
Right?
Normal losses that reflect any trading methodology, right?
Psychologically learn from your losses, not just mechanically.
Okay, what skills are necessary to experience a winning trade? Now, think about it. Now, I'm going to contrast, okay? I'm going to do a little bit of contrasting here. Just to show you one of the reasons why it can be so difficult to get even into a frame of mind where we start asking the appropriate questions about what do I need to really be consistently successful? Because what does it really take to experience a winning trade? What skills do you need? Anybody got any idea? What skills do you need to experience a winning trade?
Nothing for a single winning trade.
What's your name, sir? Maurice says a click of the mouse.
Right.
Who's with Maurice on that?
For one single winning trade, you don't
Come
need
on,
to know anything.
who's with Maurice on a click of the mouse? Got 1, 2, anybody else?
Consistently win.
3,
you need
4.
A lot.
He's absolutely right. That's all it takes.
Yeah.
There are no other skills needed. No other skills needed other than the actual physical ability to put your finger on the mouse button and click in the buy or the sell, and you can find yourself in a winning trade. You can find yourself in a spectacularly winning trade, far beyond what you could have ever imagined. And what skill did it take? What did it take? Just doing it. That's all. Just doing it at that moment. Do you need an edge? Do you even have to know what an edge is? Is it possible to just be to walk up to your computer and the arrow happened to be on the buy button, you click and then find yourself in a winning trade? You didn't have an edge, did you? You just clicked it. What did it take? It took nothing. Do you need a plan? Need no plan. Do you need the discipline to execute the plan? No, you don't need that either, do you? Now, see, you're going to see the opposite of all this, of course, is what we're going to be talking about in terms of creating consistency. But go ahead.
What you're saying is a blind squirrel will eventually find a nut. Sorry. What you're saying is a blind squirrel will eventually find.
Did you say a squirrel? I'm sorry,
yeah.
Squirrel.
Squirrel.
Okay, squirrel. Okay, go ahead.
Yeah, I can click a mouse. You know, the arrow hits the buy. I click. I get a great trade. That's good. It's all the things that lead up to me. That's the implementation. But what about all the things that lead up to that implementation?
Oh, I understand. I'm not negating that at all. Right? I'm just saying that the reality is you don't need anything. That's all I'm saying, because I'm contrasting here. I'm just making a contrast between what you need to be consistent and what you need to win.
Oh, okay.
That's all I'm doing, okay?
You just summed that up with what I was about to say. There's all the difference in the world between having the skills necessary to experience a winning trade as compared to having the skills necessary to consistently experience a winning trade.
Absolutely. That's all I'm talking about here. Because see, because what this does is the not understanding this contrast creates what I call like a huge psychological gap.
One of them talks and the other one has to talk. Wait,
because if you don't, because it's very easy for us to think that trading is easy. And if you believe that trading is easy, even if
that's kind of what I do.
All your experience is starting to tell you that it's not, it doesn't mean that experience is dropping down to a level of realization where you change your behavior or change the way that you think about trading. If your first impression, if your first experience was that this couldn't be simpler. And then you spend, how many X number of years or half a lifetime finally coming to the realization that, you know what? Yeah, to win, like what do you need? Like I could be in a casino and plunk $100 bill down at a blackjack table and end up with a blackjack. What did I need? Nothing. I just happened to win. Now, if I want to be a professional blackjack player and make a consistent income from playing blackjack, well, that's a whole nother matter, isn't it? And we're talking about the same things here with trading. There would be a number of skills that I'd have to acquire to be able to make a consistent, reliable income,
especially poker,
as a blackjack player.
Poker and trading.
There are people who do it.
A lot of similarities. Knowing, understanding expected value, understanding bankroll management.
Do you need a good reason to put the trade on to win?
Understanding even if you have a good hand,
do you need a good reason?
Setup, you're going to lose sometimes.
No, not
you're
at all.
Going to run into a better hand. Or
what characteristics distinguish the pro from the typical trader? Well, they plan their trades.
This is good.
No. They execute their plan without error. We'll talk about trading errors in a minute.
This is where my algorithmic system really helps me here.
Okay, they can move in and out of their trades with an ease and effortlessness that would boggle the mind of the typical trader.
Where I'm supposed to get in and out.
Okay, what do you need to achieve consistent results? Well, you're going to need an edge. You're going to be able to identify an edge. You're going to have a trading methodology, are you not?
That's why you backtest.
Right?
Prove an edge, backtest.
Okay. And you have to have a plan on how to utilize that edge. In other words, you're going to have to determine risk parameters. How much does it cost me to find out if this particular edge that my methodology provides me, how much is it going to cost me to find out that this edge is working on this particular trade or not? That's your risk parameter. Are you guys with me on this? Okay? money management parameters. In other words, how much in other words, contract size or number of shares that you trade.
Money management is how
all these have to be all
in
this
my
has to
back
be taken
test,
into consideration.
I saw what the max drawdown
you could have a
is.
standard amount,
That's how I
or
knew
you could
what
have an
to size
amount
in.
that fluctuates based on
What I'm comfortable
based
losing.
on other criteria that you use
From a normal drawdown
to
of the
determine the level of trade that it is. Like it could be like a 5-star trade or a 1-star trade. With a 5-star trade, you go in with a maximum position. With a 1-star trade, you go in with a minimum position.
That would be cool to figure out. I don't have that.
And profit
out.
objectives. You have to be able to set profit objectives.
Individual trades inside
See, just
the system,
having a
better or
methodology
worse,
to get you into a trade
and then position
is
size
not
according.
enough.
That would be cool to figure out. I don't have that. The 1-star trade, 5-star trade.
You have to be able to determine what the risk is on a consistent basis. You have to know what your money management parameters are, and you have to be able to determine where to take profits. None of these are easy things to do, are they? Trade execution. The ability to execute trades flawlessly so you can utilize your trading plan to its maximum potential. This is the big one right here. This is the area because when you get right down to it, trading is about trading is execution. The act of trading is.
What do I say all the time? What do I preach all the time? You have no control over the outcome of your trades. All you have control over is where you enter and exit. Don't put so much pressure on the outcome of your trades. You had nothing to do with that. All you have control over is, did you buy at the right place? Did you sell at the right place? I learned that from him, and that's what he's talking about
executing
right now.
Trades. And if you're going to execute trades, you're going to have to be able to do them without errors, because it doesn't make any sense to think that you will achieve a consistently rising equity curve if you're constantly making trading errors. Trading errors would be defined as mistakes. Mistakes that detract from your bottom line results. Now, the interesting thing about mistakes is that when you're trading from let's say the perspective of, it doesn't really take anything to win, then there really aren't any mistakes that you can make, because anything that you do could result in a winning trade for any reason. But when we're talking about making consistent money or an income that we can rely on, then everything changes about this. Everything changes. What I'm talking about here is I'm talking about these like 5 or 4 broad skill sets to be able to create consistent results, the kind of results that you can rely on as an income. You're going to have to learn an edge. You're going to have to acquire a trading methodology that gives you an edge. I'm defining an edge as that there's a higher probability of one thing happening over another. That's what an edge is. And we're going to learn the nature of probabilities here in a moment.
Although I will say we're still learning.
You're going to have to have, you're going to have to
We've been trading it for 4
have
months.
a plan on how you utilize that edge, meaning what the risk is, position size, and profit objectives. Then you're going to have to be able to execute. You're going to have to get to the point.
That's interesting. The risk and profit objectives is interesting because with my strategy, it's I don't sell at $1 up and exit at 50 cents down. I sell at a changing line up and a changing line down, and I got stopped out at RSI levels, which can be changing, kind of flexible. So that's interesting. Maybe I don't have such hard, fast rules. I still know where to get in and out, but maybe not as hard,
execute
fast
that
as he wants to
edge
see.
withoable making errors.
Not sure if that's exactly what
For you to be able
means,
to execute that edge without making errors, you're going to have to learn how to trade from a carefree state of mind, meaning you're going to have to aspire to the point where you can trade without fear. And to trade without fear, you're going to have to learn how to think in probabilities. That's basically where we're going here. And I said,
what do I talk about all the time? Probabilities. I use the term expected value because I like to play poker a lot. EV is what it's called in poker, but it's probabilities. Knowing you're going to lose trades. Not freaking out when you lose trades. Knowing it's going to happen, accepting it's going to happen.
This primary skill was learning how to trade without fear. Learning how to trade without fear is a function of learning how to think in probabilities.
Ooh, I like that.
Meaning we're going to set aside or move from thinking in a trade-by-trade mentality. In other words, what this trade is going to do, set aside, or you can execute that edge without making errors. For you to be able to execute that edge without making errors, you're going to have to learn how to trade from a carefree state of mind.
Sorry, I want to hear him say
meaning
that
you're
quote
going
again.
to have to aspire to the point where you can trade without fear.
I like that. That was the best thing he said so
far. And to trade without fear, you're going to have to learn how to think in probabilities. That's basically where we're going here. And I said this primary skill was learning how to trade without fear. Learning how to trade without fear is a function of learning how to think in probabilities. Meaning we're going to set aside or move from thinking in a trade-by-trade mentality. In other words, what this trade is going to do for me right now, am I right or wrong on this trade? And we're going to move to a series of trades perspective. Because that's what your methodology does anyway. Any trading methodology just gives you a win or loss ratio over a percentage of trades. In other words, if I take the same criteria that's in any kind of mathematical, any kind of technical formula that's mathematically based, or a technical price pattern that you would be able to see visually, what we're going to learn is that my edge, meaning a higher probability of one thing happening over another, is simply going to give me a higher win rate over a series of trades. Let's say the next 20 trades.
Judge your trade plan over a series of trades rather than, oh man, I lost this trade, or oh yay, I won this trade. Once again, something I try to hammer home all the time.
And that
you're going to hear a lot of similarities between what this guy is saying and what I preach, because so much of what I learned is from this guy.
By trade
That's
basis,
why I want to do this series.
I don't know which one's going to win or which one's going to lose in advance. There is no way for me to find out. There's no way for me to determine that. That on a trade-by-trade basis, no matter what reason or rationale that you come up with, is that there is no way to assure yourself that it's going to be a winning trade. There's nothing that can tell you that. That trading methodologies give you a win percentage, let's say 70% of the next 20 trades are going to be winners. There's no way I'm going to know which of the 70, which 12 or 13 are going to be the winners,
can tell you if an
or which 6 or 7 are going to be the losers. What you're going to learn, and this is what traders, the professionals have learned, is that there's a random distribution between wins and losses over any given set of criteria that define your edge. There's a random distribution.
And it's why I try to help people that get all angry in my YouTube comments when I have a red day.
But I just don't know which trades are going to be.
You've got to understand this. This is a very basic component of trading that you have to understand.
When you make this complete shift,
you're going to have red days. You're going to take red trades. It's going to happen.
Now, I'm expecting you to make it now because we're still in the introduction. We won't really get into the meat of this until a little bit, but this is where we're going. Okay, that's all I want you to get. This is where we're going. You're going to genuinely learn how to think in probabilities.
I'm going to highlight this one too.
Because when you have genuinely integrated these concepts into your mental system at a functional level, your fear will go away.
Okay.
You do not need to lose everything to get to the point where you can figure out that, well, I've got nothing to lose anymore, so I don't have anything to be afraid of. You don't have to do that, okay? You don't have to do that.
I don't know how to make it stop highlighting, but
all you have to do is commit yourself to learn how to think about trading in another way, and your fear will go away. Because what we're going to learn is the correlation between what we believe and what we feel.
He's still kind of introing.
There's a direct correlation between if I'm going into a situation with a certain belief that, let's say, that my particular edge is going to tell me what's going to happen on this trade right here, I wouldn't even put this trade on unless I thought it was going to win. When you really understand the nature of price movement, which is what we're going to get into after we go through this section on skills, when you really understand that, you will never think that way again.
Yeah. That's why my answer to that question when he asked it is I would take the trade if I knew it had positive expected value, which is this, right? Positive expected value over time. But, you're never going to know, like he's saying, whether that one trade is going to win or lose. It has been 20 minutes. It was a great part, definitely the best part so far. And like I said, he's still introing what we're about to get into. So the next handful of parts coming up here are about to get really exciting. But that's the end of part 4. You do not have to know what's happening next to make money. Fear dissipates after losses, which create a carefree state of mind. Once that state of mind is achieved, everything changes. You cannot have execution mistakes. Learning to trade without fear is a function of learning how to think in probabilities. think about the outcome of a series of trades rather than one individual trade. And there's nothing that can tell you if an individual trade will win, will make you money. So that's part 4. We're really starting to get into some of the meat and bones now. So hopefully you all enjoyed this one. I've enjoyed this one the most so far, and I'm already looking forward to watching the next 20 minutes of it tomorrow and getting the next one up. So hopefully you guys are enjoying this. Like, subscribe. You all have a good night.